Hi, Michael here, March 20, 12:35 p.m. Brussels time. European markets have been open for over 3.5 hours. US markets will open in about 3 hours, so we've still got some time to go there. Over the weekend, it's been confirmed that UBS will buy Credit Suisse for over $3 billion, following the news of three other banks that have already fallen over in the US in the past week. That is obviously good news, but it is something that I did predict in videos 29 and 32, where I noticed that the markets and the analysts and the traders were very much in a waiting position. And what I said then is, they're waiting for something, but they don't know what. If it will be a positive event, we'll see further soaring in the markets, and if it's a negative event, that will be used as the excuse to go back into the trenches, and that's unfortunately what's been happening over the past 2 weeks. And I fear that, as far as I'm concerned, as an investor, this year as an investment year is game over. I'll continue to try to do my best, but I very much doubt I'll be able to get a higher return on the markets this year in 2023 that I will be getting on my savings account. But obviously, that only we will know on um, December 31st. Um, the real problem is not that we do a cleanup in the banks that are in trouble or who, as usual, have been behaving like pigs. The real problem is that even healthy banks may start falling over if their customers start panicking, and through their online banking systems, with a push on a button, start moving around their money. And like that, even healthy banks may get into liquidity issues, even while they are completely strong and healthy. So we'll see over the next weeks what's going to happen. I don't know. Your guess is as good as mine. But we've seen these situations before, and I've never seen this getting solved in a very, very short term. So it's a bit sad by mid-March to have to say that, as far as I'm concerned, this year in terms of investment success may be over. But let's hope that for once I'm wrong, because as you all know, I don't know what I'm doing. What I do know is that following my analysis of today, in my US watch list, we had 16 shares that have been promoted from hold to accumulate or buy. And 10 of them are looking at a short-term rally at a technical catch-up ahead. From those 10, I'll share 5 with you. Um, so you can use that for whatever you want to do with that. I would strongly advise to not buy unless you've got a professional advisor supporting you. But let me just show the 5 shares that have have just recently been promoted from hold to accumulate. Um, these 5 from the 15 all have as I said, technical catch-up ahead, but unfortunately none of them already enter into the sweet spot right now. But that obviously may happen. Huh? First one, Google. Let's see if we can find Google. Not sure why not. It is Google, it's not Google, that's Golden Oceans. We are looking for Google. That's not Google. Let's continue a little bit. I don't know what's going on here. There we have it. Alphabet, Google. Don't mind these last updates here. The update of the dates has gone wrong. I can assure you that 80% of the shares in this watch list have been updated this morning. This should read a last update date of actually 19.3. but I guess a link to my input file has been broken. First resistance that was mentioned here still is 100.32. New first resistance, as I've calculated it, which was confirmed by my brokerage account, is 108.18, which gives us a nice spread of 6.46%. Not good enough for the sweet spot, but a nice spread. SWKS. Skyworks. Is that the one? Yes, WK Skyworks. Last spread mentioned here, 112.33. New spread is 116.31, which gives us a very small spread. Number 3, MTH. Meritage Homes. Slight increase in the first resistance from 110 to 111.13. The spread already wasn't that high. It's increasing now to 1.5%. Not super impressive, but it means we need to keep an eye on that. Obviously, we're going to have a look now at the next one, Pilter Homes. It's a share I've been buying and selling in the past already a couple of times. It's never let me down. It's a steady performer. Pilter Group. Increase in the spread from almost 56 to 57.42. And again there, a nice increase in the spread, not good enough for the sweet spot, but it's there. DHI. Dr. Horton. I don't know what these people are doing, but they do increase their first resistance from 98.69 to 104.41. The spread was 1.28, it's now moving up to 7.15. It's a nice spread already. And the last one I'd like to share is also a share that I've been buying and selling in the past. HCA Healthcare. That's not the one. It's also not the one. Let me try that differently. This is going to take too much time. So let's pick one I've got on the reserve list here, PBH. Prestige Consumer Healthcare, which increases the first resistance from 65.79. Actually, it's a very small increase from 65 to 65.8. So that is hardly going to make a difference on that spread that was already 7.3% there. Any big changes to the dashboard following this? Not really. You can see here on the top left hand side in the pie chart that the market is really freezing down. We used to have around 25% of the shares in reduce or sell, or about 25% in accumulate or buy, and then the remaining in hold. Over the past weeks, we've seen the piece of the pie for accumulate actually growing to almost 30% at the expense of the shares that had a rating of reduce, and that is completely turning around now. So this is clearly a market that is going very bearish, and I predict a couple of months of winter here on this market in particular. Not good news, I'm sorry for that, but it's not my fault. I do hope you've enjoyed the video and that it was of help for you. If it was, please subscribe and like every now and then. And we'll be back with an update again tomorrow. Thank you very much.